Wait a minute. This guy was 19 when he did this?
Yes. But he still made $400. So he made what, $370 on a $30 transaction. That's a pretty good rate of return.
Yeah. Right. Pretty good rate of return. Not quite as good as the 800 million would be.
That's all.
Still a pretty good rate of return.
That's also true.
Welcome to the Financial Puzzle Playbook podcast with your host, Jim Sumpter. I'm RJ Malik, producer of this podcast. Jim, as always, good to see you. And I have to say, you seem a little more excited about this podcast than you have with some others.
Well,
why don't you tell us what's going to be happening on this Financial Puzzle Playbook podcast?
I will, RJ. First of all, it's great to see you. This episode is going to be one that we have not done. This is episode, 47, 48 for us. And we're going to do a double episode. I'm going to go ahead and promote part 1 and part 2. For our listeners out there, you are absolutely going to want to listen to this. This is going to be interesting because we're going to go back to the puzzle piece of investments, which, we talk a lot about investments. We've talked stocks, we've talked bonds, we've talked cash, we've talked real estate. We have not talked digital currency at all. And today, and then part 2 is going to be all about digital currency. And I'm super excited. I have a guest with us today who I have known probably about a year now, something like that.
Sounds right. Yep.
Yeah. So Loran Coffman, who is a colleague of mine at our firm, RFG Advisory. We're both independent advisors. He owns his own firm in Troy, Michigan. And so he is an advisor that has worked a lot with digital currency. And so we're going to kind of get into that. Loran, first of all, welcome to the Financial Puzzle Playbook. And I have to tell you, as always, anytime I have a guest from Michigan, okay, because this is what you guys do, I need you to show me where on the hand is Troy.
Well, I'll go like this, and it's kind of on the southeast side, down over by the thumb, northeast of Detroit.
Okay. So we've established where Troy, Michigan is, and that's a good thing. Loran Coffman, again, welcome to the show. Tell us your background a little bit. Let's get to know you. How in the world did you get into learning about digital currency? And then we're really going to kind of jump into this. And before you do that, I will tell the audience this first episode is going to be what I call the basics. And then we're going to get really into the meat of digital currencies into part 2. But in the beginning, we need to get to know you a little bit. So what's your background? How did you kind of get into this whole thing?
Well, basically, I've spent almost 3 decades in financial planning, and it really is developing. Jim, in this industry, you've got to stay current with what's happening, whether it's technology and development or, headline news like artificial intelligence. Today, we're also looking and exploring perhaps some of the new asset classes that are being developed over time. Digital assets as a category is a developing asset class. So when we build portfolios, we look for investments that can complement traditional stock and bond portfolios, and at the same time, perhaps be lower correlation. Maybe that's more technical, but the idea is it runs to its own drumbeat. It doesn't really necessarily correlate when the stocks go up, whether it goes up or down, or when bonds go up or down, whether it goes up or down. And I found that fascinating. There are other asset classes that have something similar. And I was inspired, I'll say, by what the opportunity was in digital assets. Some people call them cryptocurrencies. It's not the best name in the world. I don't know anything with the word crypt with it that makes it sound exciting.
That's fair.
But it is perhaps maybe mistitled because it comes from cryptography and how to break down the tracking of and documentation of puzzle pieces, kind of like your show.
Okay. Okay. So we're going to talk about blockchain in just a little bit and get into what that actually is. And I think that sort of dovetails as to what you're describing there. Let me ask you this. So you are, if I'm looking at your designations, you have a MRFC, so a Master Registered Financial Consultant. That one I can get behind. CRPC, Chartered Retirement Planning Counselor. That one I can get behind. Okay, this one fascinates me. Certificate in Blockchain and Digital Assets. So what does that mean? How long have you had that? What you have to do to get it? And then we'll kind of get into what does it actually do.
The certificate in blockchain and digital asset was a more recent development in credentialing that came out of the growth in this industry. It was really led in a visionary program by Rick Edelman. Rick Edelman is a gentleman who has been a thought leader in the financial service industry. And through, I'll say, his efforts to form a program to help advisors learn about and begin to understand what digital assets are, what cryptocurrency is. That program is a certification process where we go through various training modules, everything from what is blockchain to what is Bitcoin and to what is the bigger picture and taxation and how is it being treated. And this all started as it was developing as a brand new asset class. And I mean that in the sense that there wasn't formed regulation around it yet. So that's also why it perhaps has taken time to become more mainstream. The regulators, the Securities Exchange Commission, the Chicago Board of Futures Market, all of those oversight regulatory agencies had to figure out what to call this stuff. Is it a security? Is it a personal property? Is it an asset? How do we treat it? How do we tax it? So that's where the program comes from. Certificate in Blockchain and Digital Assets was issued by the Digital Asset Council of Financial Professionals, if that's not a mouthful.
Okay. that is a mouthful. Okay. So you have that, and that's amazing. And so, I think that's really cool. You mentioned using, digital currency, Bitcoin, and, we're going to talk about, a lot of times it's kind of like if someone says, may I have a tissue, but they say, can I have a Kleenex? I think a lot of times people view digital currency as Bitcoin. And digital currency is so much more than Bitcoin. And we're going to kind of get into that. But let's talk about on May the 22nd, which is a very, very important day in this whole world because it was the first day that there was ever a transaction done. Now, I'm not going to steal your thunder, but walk me through what the first transaction of using Bitcoin actually was.
Yeah, so it's an interesting story, partly because the whole premise, the development of this idea of a decentralized, what I mean by that is there's no one entity that controls this. The banks don't directly control it. A government doesn't directly control it. It is a way to create a ledger that's on thousands of computers around the world. And the software developers, maybe those who are a little more tech oriented, nerdy oriented, were trying to figure out what this new software might be. What is it going to, how are we going to be able to use it? And in the form of testing practicality, there was a developer in Florida who posted a message in 2010. So mind you, quick background, 2008, this was really kind of formulated. The idea, there was a white paper written about it in 2009. The first processing of software application use on this platform was done. So about a year later, it's, hey, we got these things called Bitcoins. What can we actually do with them? Are they just out in the ether and a message out there, or is it really something tangible we can use? So a software developer in Florida posted a message on a Bitcoin talk forum offering Bitcoins to anyone who would order him 2 large pizza, Papa John pizzas. And so somebody took him up on this. A young man in another state, California, his name is Jeremy. He actually said, I can order the pizzas. I will order them, and bought them on his credit card and had them delivered to this software developer in Florida. And that would have been known as the first known purchase of real world items with Bitcoin. And hence it's been called Bitcoin Pizza Day.
Bitcoin Pizza Day.
And you got to ask me,
Okay.
Jim, how many Bitcoin?
Well, that's what I was about. That was you took the words out of my mouth. Okay. How many Bitcoin did 2 large Papa John's pizza cost?
So in 2010, the software developer offered 10,000, that's 1,000 Bitcoins. At that time, mind you, it was only worth about $41. And there was no real established market for it. This was still a reasonable trade because Jeremy basically bought these pizzas and had them delivered for under $30. So he was still making a profit on a reasonable trade. But let me kind of translate that into how absurd that might be in hindsight. 10,000 Bitcoin today, a single Bitcoin is trading for somewhere near $80,000 a coin.
For one.
For one coin. So take one coin 10,000 times. That's more than 800 million with an M dollars today.
Wow. That's some expensive pizza.
That's exactly right.
So, okay. So what you're saying is, so we're 2026. This happened in 2010. So 16 years ago. Okay. 10,000 Bitcoin, bought 2 pizzas. That today. Now, I have read that Jeremy does not own them today. I bet he wishes he did.
Probably.
And he may own some others or whatever, but
He actually was interviewed, and later was interviewed and said that he actually had sold them, but sold them for close to $400. So, mind you, at the time that occurred, he took, some gaming, and I think it was said he took his girlfriend on some trips. Because he was 19 at the time.
wait a minute. This guy was 19 when he did this?
Yes. But he still made $400. So he made, $370 on a $30 transaction. That's a pretty good rate of return.
Yeah, that is a pretty good rate of return. Not quite as good as the 800 million would be.
That's all.
Still a pretty good rate of return.
That's also true.
Oh man. Okay. So that was pizza day. Okay. So that was our first transaction. I have read that, today, if you want to go buy a Tesla, you could buy a Tesla with Bitcoin. You could buy other things with Bitcoin. There's a lot of transactions that actually you can use Bitcoin. Let's talk about, okay, when I talk about digital currency, going back to my Kleenex or tissue analogy, or if I say I need to go photocopy something, well, I need to go Xerox something. A lot of times we relate digital currency to Bitcoin, but are there other currencies? What are some of the kind of most prominent, most well-known names out there of the different types of coins that we have?
Well, it is starting, Jim, to become a little more mainstream. There's thousands of different kinds of cryptocurrencies, but I want to kind of take a step back for a minute.
Okay.
Bitcoin was the first form of an application on the blockchain. I think it makes sense for perhaps us to build on the understanding of what is blockchain, and then what lays on top of blockchain, and then how might we be using those. And others listening to this may actually be familiar with terms like Bitcoin or Ethereum or Ripple, XRP, or Solana. Those are probably the top key leading market share, I'm going to call them cryptocurrencies or spot coins. Understand a lot has evolved since the first Genesis coin mined back in 2009. So the theory was that you'd have this ledger, a bookkeeping process. Probably many listening to this are familiar with like Excel spreadsheets and maybe Google Docs or sharing a document. Today, I could work on a Google document, host it so that it would be a shared document, so that you could also be operating in the exact same document in live time while you and I are both working on the content of that document. Okay.
Okay.
but we can make edits and deletions and change the core of the document. Blockchain is like in similarity to a Google document that's been shared across thousands of machines across the internet, and edits can be additive, but we can't delete them. So it's indelible from that standpoint.
Okay, and this is not just in the U.S. This is worldwide.
It's global.
Global. Okay. Right. Okay.
So instead of one company storing every single transaction, there's thousands of computers holding identical copies, and that allows for kind of a proofing, checking process so that these transactions, anything that's added to the history to document the activity, is indelible.
Okay.
That's blockchain.
So once it's on there, I can add to it, but I can't take it away. Okay. We're going to get into when we do the second episode and get a little deeper into this, we're going to really kind of get into blockchain a little bit more and talk about hacking and things of that nature, because I do want to go deeper on this. But again, this episode is going to stay, 30,000 or 40,000 feet, or we could say 800 million feet. How about that?
800 million.
So we're going to say at 800 million feet, we're going to go with that number. Okay. So that's blockchain. So who created this blockchain, and does Bitcoin have a blockchain, and Ethereum have a blockchain, and Solana have a blockchain, or is it all one blockchain?
Well, it's one distributive ledger that keeps track of these different layers of cryptocurrency. So again, I'm calling them cryptocurrency. Let me liken some of this to other familiarity. Perhaps if you thought of Bitcoin as a store of value, or a way to say we have this unique transaction that can store value, it has some unique characteristics. Some of those characteristics are scarcity, meaning like gold, you cannot just make more of it. There is a limited supply. 21 million Bitcoin were initially issued. You asked me a question about who developed it. Well, there's lots of speculation around it. The pseudonym for the creator that could be either an individual or a group of people was Satoshi Nakamoto. So that's the name. And so when a Bitcoin is available in fractional ownership, if you went out to buy it and said, I don't have $80,000 to go buy a single Bitcoin today, I just have $100 and I'd like to buy a part of one as a Satoshi. So that's where that partly comes from. Satoshi Nakamoto, you have a smaller ownership of the fractional piece of one Bitcoin. But so there's scarcity. There is decentralization. So no company runs it. A Satoshi is that piece of one coin. You have permissionless, meaning I could send you or anyone else that I'm connected to a Bitcoin to anyone at any time in minutes or seconds, anywhere in the world, without needing a bank, without a wire transfer, without requiring days or delayment or extra charges to have an entity here in the U.S. maybe accept it internationally somewhere else. So we don't have traditional banking requirements. Again, that goes back to legislative conversations. But that's how come this can be such a powerful tool for so many of the unbanked individuals in the world. So that's just talking about Bitcoin. Now, within Bitcoin, there are, and if you start hearing these names, Ethereum, as I mentioned, think of that like an app. Ethereum is more like an app if you were thinking of your phone apps. Hey, there's an app for that. I want to send money and I want to have an agreement to send money that you perform a certain activity, and we have a contract, and it says when that activity is done, you get your Ethereum. That's called a smart contract. So now I can do business with other people, one-to-one, with no middleman.
Okay. So is that more cost effective?
Tremendously, and in seconds. And you've taken the middleman, the banking system, the traditional financial system, out of the middle.
Okay, so that's Ethereum. Is Solana kind of similar? Is Dogecoin kind of similar and things like that? These are names that we may have heard of.
Yes. Well, let me say it this way. There's kind of a grouping between business application functions, apps like Ripple and payment methods, and options to solve bottlenecks where there's resistance in communications between an activity that could be transferring money out of the country or into the country, or transferring between family members, just between states. That there's that frictionless transaction can be done in seconds rather than in days or hours. So yes, it's much more efficient.
Hi everyone, I'm Cassidy, the second C in CMC Financial. So Dad sometimes gets on a roll with this podcast and might forget to remind you about a few things. 1, don't forget to like and share this podcast and leave a review. 2, follow CMC Financial on all of the socials, Facebook, Instagram, and LinkedIn. And 3, go check out the website at cmcfp.com. Okay, back to my dad. He's probably still talking.
This is a fascinating conversation. Yeah. So Loran, let me ask you this. There's been a lot of skepticism out there, and we're going to dive a little bit deeper into that in the second part, in the second episode. But on the surface, if someone wants to consider investing in crypto, in cryptocurrency, in this digital currency world, where do you start?
Yeah, it's a great question. The good news is that there's been a lot of regulatory development, and we as advisors, in order to be able to use entities and custodians and banking relationships, need something that is more approved and mainstream and has oversight by the SEC or by the Financial Industry Regulatory Authority or other entities to say, we agree what this thing is and how you can access it. So the preference would be for the general public to look at things called exchange traded funds. There's lots of ETFs or exchange traded funds that make it very accessible. And most of your mainstream platforms today, so what I mean by mainstream, a Schwab, a Fidelity, Morgan Stanley, RFG Advisory, other companies and platforms are making this accessible through fund families that are offering this. Whether it's a Franklin Templeton that offers an ETF, I'm not mentioning specific recommendations. I'm simply saying there are a host. There's a Fidelity digital asset platform. There is other Bitwise and Grayscale and other companies who have provided a structure and have it registered as an approved fund. That's probably the best way to consider getting your toes into the water for getting an allocation added to a portfolio for you, because that introduces not only how easy it is to get, but if you already have a custodial account or you're working with an advisor who has access to a custodial platform, so working with somebody like you, Jim, as a registered investment advisor, access to a Schwab or a Fidelity or other platforms. We tend to use Schwab here in my firm, and I can use multiple fund family solutions to help get the 30 plus ETFs available. We can use any one of them and put Bitcoin or Ethereum or Solana or some other cryptocurrency directly into that portfolio as a portion of your overall asset allocation.
Well, Loran, I'm going to wrap up with this episode. This has been a fascinating conversation. As I have teased several times here, we're going to do a part 2. And then as we're getting into this, my mind is going all over the place. I'm thinking, I may have him as a regular guest on the Financial Puzzle Playbook, because this could be a really very interesting topic that, we could do a whole series on any one of these topics. And I think it would make a lot of sense. So if you like this episode, please let us know, but we are going to do a part 2. So, RJ, I'm going to throw this one back to you, and then we'll look forward to part 2 coming up at some point.
All right. Before you go, Loran, any contact information if people have questions for you?
Happy to have them call me directly if they'd like to. My direct phone number is available, not to mention my website where all my other contact information. The company, Route Financial Group, like the route you take, ROUTE. So it's routefinancialgroup.com. And my personal phone number, 248-825-4220. 825-4220. It's a Michigan exchange, 248. So,
Excellent.
But mobile phones nowadays, there's no long distance bill for that.
No. Okay. Very good. Thank you. And Jim, your contact info.
Yeah. So as always, 205-510-9074 is my direct line. CMCFP.com is our website. You could reach us on all of the socials with Facebook, Instagram, LinkedIn, or follow us on our YouTube channel as well.
Excellent. Gentlemen, fascinating conversation. Most importantly, thank you for listening to the Financial Puzzle Playbook podcast. We ask you to share this podcast, rate it, and leave a review, because this actually helps others find the show. Again, thank you for listening. And for Jim and everyone at Financial Puzzle Playbook, I'm RJ Malik, and we'll see you at the next podcast.